All right. Good afternoon, good evening, good morning, wherever you are in the world. It's a pleasure and an honor and a privilege to be working with you here today. Thank you so much for your time this afternoon. I appreciate you more than you know. My name is Michael Leidick. I'm the founder and co-founder and president of backtothefuturetrading.com, and I really want to thank you for being here today. We're going to not waste a minute, and we're going to get right into the markets here so you can see what happened at the times we were watching for the moves. Today is Thursday, January 27th, 2022. And so far as I know, we're still the only company that provides times and directions in advance for futures, forex, equities, crypto, commodities, ETFs, that are based upon data mining patterns in the data that are unseen essentially to the human eye, but to a computer are obvious, like a polar bear in the middle of a cornfield. Just sort of sticks out like a sore thumb. To prove to you that our software works, we go about it in an unconventional way in our marketing. We post and publish the times and directions for the most popular futures, forex, and crypto markets presently, and then come back 2 days later to see how did the times do? Did they work or did they not work? And so today we're going to be talking about two different things: the signals, the setup, and the silver. Was the software in conjunction with the setup that we published profitable or not over the course of the 2 days that we released and relinquished the signals to you? And so keep in mind, bear in mind, this is very different from what other traditional vendors and tool makers provide. They usually have lagging indicators, things that tell you what just happened. There's a resident guru who tells you what he would have done with those lagging indicators. They ask you to pay a monthly premium or some type of traumatic one-time access package price to sit at the feet of the guru who spends a day or two with you. Usually at the end of those 2 days, you don't really know what to do and you're too ashamed to admit you couldn't figure it out. We're different. We believe to large extents markets are rigged, controlled by institutions who move markets at their whim and will, and control when, most importantly, those markets rise and fall. There's lots of pushback on that. Michael, banks, why would they do that? How would they coordinate? They're competing with each other, aren't they? Aren't they? If you've watched any of the financial documentaries or popular movies like The Big Short, starring Steve Carell and Christian Bale, forgive me. I always conflate those two because of the Dark Knight movies. We learn and we see that banks do, in fact, collude with one another. They do, in fact, get fined by the government for billions of dollars for manipulating markets. Most recently, JP Morgan absorbing nearly $1 billion fine in the trading industry. And so my partner and I are each engineers. I have a degree in mechanical engineering from the Stony Brook University of Applied Sciences, and we build stuff. We build things that make your life easier. And so today I want you to think of us as your personal engineering team as you go out and race on the tracks with these banks every day. It's important, before I show you the software, that we agree together mutually what trading is. Is trading a guess about the future? A guess about the past? What is it? And when I ask that question, people generally look at me with a stupid look, like, you idiot. But I don't know that anyone's ever asked traders, what is trading? It's an educated guess with a calculated risk as to what should happen in the future. Will my pair of Michael Jordan sneakers be worth more or less 10 years from now? Will this Pokemon card my grandmother gave me 20 years ago, 15 years ago, be worth more or less 5, 10, 15 years from now in the future? Trading is about the future. And for decades, vendors have been trying to convince you that the only way to trade is by using a lagging tool, something that makes a noise, prints an arrow or a line when something has already happened. We've been duped. Many of you have been duped and have shared stories with me. You've come up to me and told me, Michael, I've spent $10,000, $20,000, $30,000 with vendors who just regurgitate this garbage and sell it. And I use it for a day, a week, a month, and it's useless. It's telling me what happened in the past, what the volume did 5 minutes ago, 15 minutes ago, what the order flow just did, what the price action just was, what the support and resistance level was. None of those things were designed to tell you about the future. Not one. And so today we're going to take a different tack, forgive me. When we agree mutually that ultimately trading isn't fair. There are people in offices and buildings who control unfathomable amounts of wealth and power, who have the ability to move and shake financial global markets that generally know long before all of us what the reports will be, whether markets will rise or fall, who have ties to or outright own media outlets such as news organizations, and get all of the cows, all of the sheep moving in the right direction right before the report they've known about is released. What are we talking about today? What are we doing? What are these charts and what do they mean and why are they important? Hello, Melissa. What are these charts? What are they telling us? What do they mean and why are they important? Well, in a nutshell, and most of the people who hear me explain it this way don't believe it. However, the evidence by the end of this afternoon will be self-evident. If you think of a calendar, Monday, Tuesday, Wednesday, Thursday, Friday, in terms of a checkerboard that we can subdivide into rows and columns, Tacheon Time Warp, which is our flagship product, is designed to look backwards into the past and find recurring patterns in the historical data. So today being Thursday, we can send the software back any number of ways into the past, like a radar of sorts, to search for times where markets lately are being pushed up or down. So say, for example, over the last 3 Thursdays that Ethereum, for example, is going up at 10 o'clock. And let's say it skyrockets straight up from the open of the 10 o'clock bar to 10:15. Our software would discover that. And it would let you know next Thursday, hey, psst, woohoo, get ready. It's going to happen. Potentially again. Let's say that crude fell every Wednesday for the past 3 or 4 weeks at 9:03. The software next Tuesday would go, psst, hey, watch out for 9:03. And remind you that someone has their finger on the scale. And so what we did earlier this week was, I think, pretty interesting in relation to what other marketing companies are doing. You see, we've done this now for the past 13 years, nearly 3,000 customers in every financial market of the world. After all of those years and all of those customers, we now have a 4.8 out of 5 customer satisfaction rating. And here's what we did to convince them, and hopefully you today. Every Tuesday, we send out forecasts for Wednesday and Thursday in the markets. I've done this every day now, almost 600 times for the last 13 years. And inside of that email is a link to a web page. Those of you that are not customers are presently receiving that email from us every week. And inside of that email is a histogram forecast. A histogram forecast, which purports to have some clue as to what's coming next, i.e. Wednesday and Thursday in the future. So on Tuesday, we had the histogram times the leading behavioral forecasts for Wednesday and Thursday for popular markets like the E-mini S&P, oil futures, gold, the NASDAQ, DAX, Euro currency, mini Dow, Euro dollar, pound dollar, Ethereum for both Wednesday and Thursday. And so when we go to look at these signals, the software is trying to tell us something. It's in essence communicating that it's discovered something. That's the first thing you need to realize and remember. When there's a signal on the chart, it's not a black box generated signal. So as we're looking here, let me close this down. When we look at this chart, remember this was sent out when? On Tuesday. And the software was just trying to remind us something. It was saying, hey, when you get to these times at the top, these times at the top represented institutional manipulation, I believe, selling pressure that had a high likelihood of occurring again in the what? In the future. So if you see a blue line at the top above the zero line, it's the computer, it's the algorithm, it's 12,000 lines of code developed over 13 years saying, when you trade crude tomorrow on Thursday, be aware. Be aware. There's some shenanigans occurring. Be aware at 6:03 and 7:33, 9:39, 10:48, 12:36, 1:27, and 3:30. Be aware, because for whatever reason lately, markets are being pushed up at those times. Now, Cynthia, hey, Brian, forgive me, I forgot to convert you over. Coming your way, bro. Now, how do we know if any of this bears any merit at all? How do I know this isn't an absolute waste of your time? Well, when we come back and look and apply what happened to what was forecast, how many of you see any correlation between what we were expecting to see happen at these times and what physically occurred at those times? That is to say, did the markets get pushed up at 239? Did the markets fall at 354? These are Asian session signals, right? Did the markets rise from 412 until 512? And did they dip down by 603? Remember, all of these times and directions were available to us on Tuesday. That's 2 days ago. Was the market pushed up at 603? It failed at 633 to slow down for all of 6 minutes before it blew up. But it went up again at 7:33 until 8:06. Where did these times come from? Came from here. The information that was emailed to 18,000 people 2 days ago. 2 days ago. Was the market driven down at 8:06? Yes. Was it driven up at 9:39? Yes. These are the times from down here. Next time up was 9:51. Look what happened at 9:51. The biggest move of the day. Was it driven up at 10:48, a time that we've been waiting for since when? Tuesday. This is Thursday. It's 2 days later. Michael, you're doing it wrong. You're doing it wrong. You're supposed to hire a team of salesmen, college kids who call me incessantly when I fill out the form for the free ebook. Michael, you're supposed to make a piece of software that fills my screens up with lines and moving averages and support and resistance levels and funky colored Renko looking bars. You're doing it wrong. You're supposed to hire a guru with a Russian or a British accent that sounds authoritative, who makes me feel silly and stupid when I don't make the software work they sell the right way. You're doing it wrong. Why are you giving us signals 2 days ahead of time that work after the fact? Where's your free trial? That's what I really want. What happened at 11:45, 2 days after the software published the report? The same thing that happened between 1:57 and 3:30, right? The same thing that happened at 1:27 and 1:15 and 12:36. You see, with the exception of a few signals out of maybe 12, nearly everything the software told us that was likely to happen 2 days ago in an email that I sent to 18,000 people came true. And that's just one example. One example. Any questions about that so far? Any questions about that so far? So those were signals, right? There's a difference between the signals and a setup. Michael, where would we have bought and sold on this chart? Where would we have bought and sold in any of the other markets that you had predictions for? For example, on the mini Dow. Well, I'm glad you asked. When we have a chart and we're looking for signals, in the email that I included was a sample setup. And the setup was based upon two different options: signals with trend and punctures. Because while you could trade every signal, we don't advise you do. It's better to have a rule set. And many of you have an existing system that you like and you use. Mike, I watch for divergence on the MACD or the RSI. Great. Mike, I look for overbought and oversold extremes with high volume climax reversals. Fantastic. Every one of you here today trades a little differently, but some of you don't have any system. Some of you are like Kramer and Seinfeld with a live account, just chaotic. And so what we said was in the email that we sent out to our prospects, hey, when we get to these signal times, we're going to watch specifically for a setup. We're going to look for signals in the direction of the trend, or what we call a signal with trend. And then we have a puncture trade, and I'll describe each of those to you here. The stop was based on 1.5 of the ATR away from the candle we're trading. So in the email that I sent out on Tuesday, I gave everybody a setup. When we get to these times, here's how we will, in theory, trade them. And here's how that would work. When we get to 8:12 on the mini Dow today, the software had discovered there was a propensity for banks to push the price of the E-mini Dow contract higher until 854, where selling pressure usually came in. Well, at 812, according to the email that I sent you in the software settings, we were putting dots with lines 1.5 average true range values away. So your risk in the market is dynamic. As the market's volatility is increasing, the risk is increasing. If an average bar in the DAX or the NASDAQ or the E-mini S&P is X in length, our stop is X times 1.5. So if the NASDAQ is moving $20 per minute, our stop will be $30 away from the low or the high of the candle. And that's what these white and blue lines represent. They're always 1.5 ATR values away. On the close of the 812 candle, a signal with trend requires an entry. Our exit is the close of the opposite signal. So if 812 was the buy, the software is telling us that 854 is when people historically do what? Sell. And so that's when we exit. Our next signal with trend, SWT for short, occurs at 936. Our 120 period exponential moving average is climbing. It's getting higher. Can you take me high enough? It's getting higher and higher. Your love keeps lifting me higher. And our next stop is 1.5 ATR values away. The close of the candle is our entry. Our stop goes below the line. And our target is wherever we are by 10 o'clock. Because historically, that's when what? The buyers arrive. I'm sorry, the buyers finish and the sellers come back in. So now, at 9:36, we come in and then we exit by 10 o'clock for a 280 tick move. At 10:18, we're going to enter again. That's another signal with trend. And this is one of the first signals that stops out. So if we measure from the close of that candle to just below the line, that's a stop out. And if you've paid attention to the webinars in the past, those of you that are here and are customers, the first trend signal that you see stop out historically marks the reversal of the trend. It tells us that the banks are no longer interested in pushing prices higher. And so here's an advanced tip for those of you that are returning customers. The very first trend signal in an up or down trend that fails and gets stopped out is historically indicative of the trend reversal on an institutional scale. Ain't no more buyers here. 1033 arrives. It's not a signal with trend. 1054, however, is. Our moving average is lifting us higher and higher. The stop is known below the white line. We enter at the close. We exit at the close of 1106. 4 trades by 11 o'clock, 3 winners, 1 loser. 1106 represents historically a time where banks are pushing lower, and they do. Our next signal is a whipsaw of sorts from 1145 to 1148 on the Dow. We enter at the close of the 1145 candle. We exit by the close of the 1148 candle and sneak away with 35 ticks. Now, 1148 comes, and lo and behold, look at what happens. It's dropping. It's dropping. It's on the wrong side of the moving average, Jerry. It's dropping. it's dropping, it's dropping. And then right here on this candle at 1224, it closes below the moving average. We call this a crossover signal in the demo video you were sent. This candle crosses over the moving average. When that happens and it closes below, our stop is one tick above the crossover candle. That's our stop, because now we're on the other side of the line. We enter on the close of that candle, crossover candle. Enter. When do you think we exit the trade? If the entry was at 1148, Cynthia, when do you think we exit that trade? That's right, 1245. So from the close of that crossover candle until the close of the 1245 signal is 120 ticks. 120 ticks. The next signal with trend is at 224. Now, 224, we enter at the close of the candle. We come down 138 ticks. Anytime we have a $500 profit, we're going to move to break even. Right? We're not going to let $500 turn into $0. So on this trade, with your permission, it comes all the way back up, misses the stop, all the way back down, $500, all the way back up, misses the stop, all the way back down, $600. I'm going to call this one, with your permission, if you'll indulge me, a break-even trade as we come into the close today. Right now, the last signal at 4:15 that I sent you on Tuesday is climbing higher until 6 o'clock. Let's take a quick accounting using just one of the setups. The signal with trend had a calculator value. Calculator, please. We'll add them up. 280 plus 150 plus 35 plus 0 minus 75 is 390 ticks. The tick value in the large contract for the mini Dow is $5. 1,000 potential, hypothetically $1,950. Let's multiply that times 0.85 for slippage and commissions. That's $1,657.50 using signals that were 2 days old. 2 days old. Signal with trend. Any questions about that? It works the same if you're trading markets like Ethereum. When the market is rising, we're paying attention to the signals in the direction of the trend. These are times where Ethereum is supposed to go up, and then we sell Doosan when we arrive at the selling pressure signals. Up, exit, stop out, trend reverses. We sell Ethereum from 1 o'clock to 2:05. We sell Ethereum from 2:15 to 5:15. We sell Ethereum from 4 o'clock until 6:05. By the way, these times for Ethereum on this too good to be true chart were sent out to you on Tuesday. On Tuesday, the software told all of us, when we get to these times in Ethereum on Wednesday, when we get to these times in Ethereum on Thursday, watch for these moves. Banks have their fingers on the scale of the markets. Believe it or not, you can't argue with what happens after the fact. Any questions? This is happening on all different time scales with all different markets. We can go out and look at markets like equities on longer time frames and see with stocks like Ford, for example, where prices are expected to rise. All of these times known about weeks or months in advance. And so we have the dates for when these moves are supposed to occur. Next push up on Ford is February 9th until February 23rd. We can come and look at larger commodities like gold and get a perspective for how large those moves are supposed to last. If gold has climaxed right here, you can see the banks had a double top with a stop run. Everyone got trapped before they tanked and dropped it. How far has gold fallen on the daily chart since this signal? It's fallen almost $50 an ounce. And that's expected to continue until February 7th. Gold on a daily time frame. We can look at markets like the euro US dollar on a daily time frame and see if we sold the euro against the dollar, all of the places above the moving average where I've marked potential winners. We're coming up on the next push down on January 31st. So higher time frames and lower time frames alike are subject to the same algorithms being used by the software. If we come and we look at the E-mini S&P, we'll see that Tuesday, the 25th, marks the beginning of what? The next round of selling. The signal before that was on January 10th, where the market actually, from the close of that candle, rose $83 out of the center of that pivot before it fell. Remember what I said earlier about the first signal that fails in the direction of the trend is what? The trend reversal. So by all accounts, we're seeing, or we knew about that reversal days ago. This right here potentially signaling the reversal of the ES for some time. When? Until February 9th. Until February 9th. Those of you trading on longer time frames, buy and hold, will be watching for that. Tesla, this is the first time it has hit its stop moving into February 2nd. So when the market was expected to go up, it went sideways here for 1, 2, 3, 4 days before the drop. Using a technique that we teach in our force class, I'll show you that this drop was expected on the 20th, and the close of today is going to be a potential buy-in point. So if you're a stock trader and you're following along, be aware of the fact that we just broke through the structural low on a day where statistically this will rise higher now until potentially February 2nd. Okay, so it works on larger time frames and smaller time frames. It works with futures, and here's a chart of the Great British Pound, US dollar, and all the places you had an opportunity to sell the pound at 505, at 625, 910, 1025, 1155, 125, and 210. 440 is the next signal, and then 625 tonight, which brings me to the following. If you have this program, you can see into the future. The chart is divided into two halves. What already happened? This is the track record. Is the software producing reliable signals? Are we seeing pushes up and down at these times? And the right-hand side, the possible future. These are the signals waiting for us. They never change, they never repaint, they never disappear or reappear. So this would all be pretty impressive Here we see it working on Bitcoin on a 15-minute chart. It would be pretty impressive on its own on a quiet week with no news events. But what happened yesterday that mixed it all up and made my job potentially very hard today? My job is to convince you that these things are happening and this can be a positive work aid for you. And yesterday, if you turned open your news reports, you saw our favorite guy, Mr. Powell, deciding he was going to talk about things like interest rates. You know, all that free money that they've been printing and giving to people during this administration, the Trump administration, the Obama administration, quantitative easing going all the way back to Bernanke, happening for a long time. Banks borrowing money from the Fed at near zero interest rates, investing it in stocks, overinflating their value as much as 30 or 40%. Powell said, no, no mas. Well, that would be hard to predict. The moves would be hard on those days to identify. And we see in other markets like crude oil, yeah, it works. You can see when the signals were supposed to produce moves and what's happening. This is a live crude futures chart right now. But the market that breaks everybody's huevos, who knows which market is the #1 market to blow people's accounts up? Who knows which market is the one all the vendors tell you you need to trade in case you have to scale up? Once you start using my software, you're going to need to trade 100 contracts, Jerry. NASDAQ won't handle 100 contracts. Pretty soon, Alberto, you start using my WYSIWYG software, you're going to have a big contract to trade. That's right. The one that I've seen most people lose their life savings in is the E-mini S&P 500, the rock. The E-mini S&P, over the last 13 years, I've worked with traders as a developer and support team member, has killed marriages. I've seen the ES blow up churches. I've seen people get divorced. Fathers never get to speak to their kids again, custody battles. The ES is the rock that breaks people's accounts. So it's probably the hardest one to predict, especially when one of the 2 days that you've given signals out for is the Federal Reserve, FOMC, blah, 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 the big report. I just want you to see that 2 days ago on a Tuesday, I sent this chart out. Why is that, Bert? Because I believe that's where investment banks and trading firms, the more liquid the account, the more liquid the instrument, the more opportunities to manipulate it. Does that make sense? The more sheep in the field, the more wool and lamb chops you can bring home. That's a theory. So it's anecdotal at best, right? Well, here's what I know. Yes, Philip, every chart that I show you is a 714.8. So, Bert, we have the signals for the ES 5-minute for Wednesday. This is, as you'll see, the FOMC report signal day. We also had the times for today. Today's E-mini S&P movements. Now, this chart is 2 days old. Wednesday was 1 day old. And I want you to see what happens when we apply the 2 setups that we learned about in the video I included with your email. Let's go back and look at yesterday. We'll start from the Asian session through the London session through the US session. Bert, every one of the signals on the bottom of the chart are taken directly from the signals that were published on Tuesday. Every one of the signals. Nothing was changed, nothing repainted, disappeared, reappeared. All those signals are there. I'm saying we would have traded up to the report, the FOMC report, and then no thank you. When I did that and we had our signals with trend, you can see, Bert, what happened at those move times, right? You can see what happened when we traded between the buying pressure signals and the selling pressure signals. $20, $27, $37, $44, $48 minus 1 is 47. Let's call it an even $45 in net hypothetical profit. So ES on the small contract, on the large contract, is $50 per dollar, is 2,250 times 0.85 for slippage and commissions. Let's call that a $1,900 day per contract. Using 24-hour-old predictions. If you're trading the micro, that was a $190 per contract micro, 10% of the macro contract. Bert, that was on the FOMC day. What about today? Well, today when we did the same thing, I want you to see where the signals were that I mentioned in the videos. I want you to see what took place at the times that we were waiting for the move. So Bert, the software on Tuesday afternoon in the email I sent out to 18,000 people warned us, if the trend is rising, watch for a move between 8:05 and 10 o'clock. This is a 48-hour hold forecast. Based on what? The shenanigans of the people who manipulate the market you trade, the one that breaks everyone's account. From 8:05, the close of the candle, until 10 o'clock was a $56 move. That's a $2,500 potential profit. There's that double top. I don't trade highs and lows. I try to trade with the trend. Look at what happened between 10 o'clock, Bert, and 10:55. Then we have a signal long from 10:55 until 11:20. It goes about $16 up. It ends up about halfway down by the time it's finished. And then, Bert, what happens at 11:20? Higher high, lower high. And we drop 11:20 all the way down to 12:50. Nick, every webinar you ever come to on a Thursday, I've said this every week, the settings are 714 with an 8 swing strength. I've been that way for 5 years now. Bert, what happened to 205? Oof. No, don't be sorry. It was a good question. I'm just in the zone, Nick. Did it go down at 205? Yeah. In fact, Bert, can you see where my original entry was on that signal? Have you noticed, Bert, when you see my signals come up, they almost immediately go in the direction of the trade that we were expecting? Wouldn't that be nice? Wouldn't it be nice if we were older? Boom. It's not even the right entry. I'm low. It's more like a $1,500 move. It ends up finishing $15 in the direction. So $1,900 yesterday. Let's bring out our magic calculator again before I introduce you to someone very special. And we'll add it up. Ready? First, the good news, 0.25 plus 56 plus 8.5 plus 25 plus 15 minus 10. Let's call it minus 10 again, minus 7. $77. Let me just verify this was 10, $12. I'll minus 2 more. Minus 2. 75 times $50 per contract. That's $3,787.50 times 0.85 for potential slippage and commissions. Let's call it a $3,200 day. 32 per contract. 48-hour-old forecasts. $320 per micro contract. So the hardest market to trade over 2 days, almost $2,000, $3,000, $5,000 using signals that were harnessed from the historical data. Michael, that's impossible. It doesn't work that way. Look at it. I've argued with 3 different people this week who've told me, woken up early, warmed up their fingers. I'm going to write him an email and tell him how this doesn't work. It can't work. Year after year after year after year, Thursday after Thursday after Thursday, I sit here and I show people, you're playing a rigged game. And they go, no, it's impossible. And I show them the charts in oil futures and I say, look, you're playing a rigged game. No, fraud, shyster, snake oil salesman. Look at it. My dad used to catch us doing stuff when we were kids. Something got broken, the cookie bag was empty. He'd say, I didn't do it. Your mother didn't do it. And you said you didn't do it. Must have been the dog. Must have been the dog. That was his favorite thing to say to us and terrify us right before our respective beatings for lying. I'm not lying to you. How else can we get these results? How else can the signals be that correct that often? 1 day later, 2 days later. How often do you have to come on a Thursday and see for yourself what's happening? I'm going to pass things over today a little sooner to my associate, Mr. Brian. Are you here today, Brian? Can you put your mic on so I know that you're there?
Can you hear me?
I can hear you.
Great.
Brian, what I'd like for you to do for me, I got to take care of some things with my son who's getting foot surgery tomorrow. He's 15 years old and a little weird, but we're preparing him tonight and doing some stuff with his room, getting crutches ready and things. Yeah, Jim, it's scary stuff. But what I'd like Brian to do is kind of walk everybody today through what's involved, what his experience with the software has been, what's involved with getting started with us, what's included. But I want you to remember one thing at the end of this before I pass it over. However you think of me, if I'm aggressive with you in an email campaign, I come back at you and say, no, listen, you've got to pay attention to this. It's because after 13 years and 3,000 customers and a 4.8 out of 5 Trustpilot rating and more emails than I can count from people who've lost everything. I want you to see the truth. And the truth is, these people are ruthlessly manipulating markets day in and day out. There's no way we could have done what we did here today, given you the signals this far in advance, shown you a basic trading system with ironclad mechanical discretion-free rules, $2,000 yesterday, $3,000 today. There's no way you can know what the banks are going to do without a tool like this.